Hello and welcome to Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, last week we talked about the coronavirus and how investment markets became focused on a second wave, particularly in the UK and in Europe. Now, this week the story is still very much the same, but with the added layer of political risk as well. So as I make this video, the FTSE 100 is around about 5885. The S&P 500 is around 3335. The VIX has dropped back down to around about 27. So that fear gauge for the market is now down towards its 20-day moving average, which is normally a good sign. The 10-year US Treasury yield has fallen to around about 0.64, and we've seen similar moves on the UK gilt. So at this point in time, markets are seeming to be stabilising, although the trades that seem to favour the work from home ethic, so the tech stocks, have started to find some buyers coming into the market. Now, you can see that if you look at the Nasdaq 100, in the last week, the Nasdaq 100 has rallied 4.52%, which is a significant rebound. And if you look at individual stocks, we've seen much higher rallies in those particular names. And again, that's partly because we're seeing people starting to invest like they did in the first wave of the coronavirus, buying some of those technology stocks as a defensive play. So we've seen US technology stocks start to recover in the month of September. Now, if we go back and look at the whole of September, it was a month where technology stocks got a battering. So the Nasdaq 100 tumbled more than 10%, as did most technology stocks. We saw Tesla fall by more than 20% from its high. All of this ended up dragging down the wider S&P 500 index, which also hit correction territory, meaning it fell more than 10% from its high on the 2nd of September. Now, if you look at the market, the FTSE 100 had threatened to turn around a trend that we've seen for a number of years now, where it's been lagging the wider US equity market. And in fact, it was one of the best performing markets for a while during September, but then that started to unwind slightly and the other markets started to catch up. The FTSE 100, for example, was down around about 1.1%, which, if you compare that to the S&P 500, which is down around 4.7% month to date on a price level, then if you factor in the movements of the pound, then the picture's very different. The FTSE 100 goes from being one of the best performing global equity markets to one of the worst. In fact, the S&P 500, when you factor in the fact that the pound has fallen, actually is only down 0.5% for UK investors. Meanwhile, the FTSE 100 is still down around minus 1.1%. In fact, the best performing market for UK investors has been the Nikkei 225, which is up 6.43%. And as I said, this is all down to currency moves. Now, the pound tumbled against the dollar. The dollar was strengthening, as I mentioned before, but the pound was weakening because there were concerns of a second wave of the coronavirus hitting the UK, but also because it looked like, at one point in particular, that the UK may crash out of Europe without any form of deal. And that started to put pressure on the pound, and we saw it fall to around $1.275 to the pound. So in the coming days and weeks ahead, keep an eye on currency moves, particularly the yen versus the dollar index, and of course the pound versus the dollar. And of course, we've had political risk added on top of the coronavirus worry that we've seen in investment markets. In the UK, that's in the form of Brexit negotiations that have been ongoing this week, and there has been fear that they may collapse. So in the coming days, watch the headlines that come out of Europe regarding the potential deal that will be brokered with the negotiations. There is a rough timetable that's meant to be that all negotiations are meant to finish by mid-October to allow time for them to be ratified and come into law at the start of the new year. Now, if that doesn't happen, then you can expect the pound to tumble. And that will obviously be positive for overseas holdings when you factor in the currency exchange rate. But also over in America, we saw the first live debate between Donald Trump and Joe Biden. And of course, that ended up being a bit of a slanging match, where there was the word chaos was used in most headlines to describe what went on in that particular debate. It wasn't much of a debate, to be honest. And of course, markets have now started to worry this is going to be quite a fraught presidential election, and in fact we might have a result that's contested, and markets don't like uncertainty. So what we've seen today is the market start to wobble and pull back a bit. Nothing too serious at the moment, but they are starting to get worried more and more about the US election. So in the coming days, look at the headlines surrounding the coronavirus, particularly in the UK, because anything negative, wider lockdowns, is likely to impact UK markets. Of course, you've also got the presidential election coming up. That's going to add a level of volatility to investment markets. But in the coming days, also look out for those Brexit headlines. So the message of this week's show is expect some volatility in the days and weeks ahead. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email, damien@moneytothemasses.com, via Twitter, moneytothemasses with the number 2. Of course, you can contact us via Instagram, Facebook. Don't forget to join our Facebook group, facebook.com/groups/moneytothemasses. And of course, subscribe to our YouTube channel.